All right, good evening once again, ladies and gentlemen. Welcome to our webinar titled Grow Your Wealth with Expanding Global Economy led by Asia. It's a live webinar brought to you by Bursa Malaysia. And today we have two special guests. The first guest speaker is Mahdzir Othman, who is a Director of Securities Market in Bursa Malaysia Berhad. With him is 23 years of experience in the fund management industry. And our second guest we have here is Ms. Chong Lee Choo. She's currently the Director of Innovation Lab and Alternative Investment with Affin Hwang Asset Management Berhad. With her, she has 10 years of experience in product development in banking and fund management industries. So these two the guests over here will basically share with us how we can actually ride on the expanding global economy that we have seen in the past 10 years. Now, the global and local economies has been expanding since 2009 when the market was at bottoms, and there are many who still have not benefited from this strong growth in the economy and also the equities market. And one of the myths in investing is that a person needs a lot of capital to start investing, but how would you like to have a portfolio of stocks from top performing markets with minimal capital? An exchange traded fund, or ETF, is listed on an exchange in Bursa Malaysia and trades like a stock, but it represents a portfolio or a basket of stocks. And find out how you can invest in an ETF and how you can benefit from the growth in the global markets. So we're going to start first with questions to you guys, and the questions will be basically knowing which investment asset classes you have been investing in the past 5 years. So if you can have the first poll of questions up. So in the past 5 years, what have you been invested in? And please select only the best 2 investment asset classes. All right, let's move on. We'll take a look at the results of the poll in a short while we are waiting for the results. Now let's take a look at the performance of the Malaysian market against the biggest equity market in the world, which is the US market. Can we have the slides on the screen? So while we are still waiting to get the slides on the screen, the market's performance, I'm just going to explain to you, just share with you the performance of the KLCI. In the past 5 years, the KLCI, which is a benchmark index for the Malaysian or Bursa Malaysia equity market, has been 9.5%. For the past 3 years, the market was not really expanding that much. The market has gone into a correction, and we are looking at about 2 to 5% returns for the past 1 to 3 years. And in the past 3 months, we know that the market was not going anywhere because of the election. The market has been cautious, and we are looking at returns between 0.1 to 0.3%. Whereas if we compare with markets, a more established market like the US market, the Dow Jones Industrial Average has increased 62.8% 5 years. And in 3 years, it has gone up 35%. And like most of the other markets in the past few months, has also been going sideways without performing that much. So we'll take a look later on how the ETF perform against the indices and see whether it's worth looking at these alternative investments. So before we go and look into ETF, we're going to ask our two guests over here who are experts in fund management and also in ETFs on the opinions towards the ETFs. But first of all, we want to understand what ETFs are. Ladies and gentlemen, now if someone wants to start investing without enough capital, without enough knowledge or skills to find selected stocks, what do you think? I know ETF would be the instrument that you can look at, but what makes ETF different from the other investment asset classes?
I think generally when we talk about investing, it is important to note that diversification is key to investing. So I'm sure all of you have heard of the saying that goes, don't put all your eggs into one basket. So as such, when you talk about investing, you need to then diversify into different asset classes such as stocks, bonds, properties, even currencies, gold as one of the asset classes, as well as investments as such, and also keep some cash for liquidity purposes. So when we talk about investments into ETF, ETFs is unique in the sense that it is itself as a product is already diversified, because when you invest into a particular ETF, it would have already given you an exposure to a basket of stocks. So and typically investments into ETF come at a very, very low minimum investment amount. So that would mean that you don't need a high capital in order to invest in ETF. So that makes it easy for any man on the street to actually invest.
So the ETF fund is basically managed by professional fund managers, right?
Yes, that's right.
So it looks something like unit trust. So what's the difference between unit trust and ETF?
I would say ETF is a hybrid between unit trust and stocks. Unit trust is structured or structured just like a unit trust, full of investment in the fund, but it's traded on the exchange. Like unit trust, you are not able to actually trade on the exchange. So you have the features of the diversification, like what you were saying about when you have your basket of stocks inside the unit trust, also inside the ETF. But for investors, it's very convenient for them to actually trade in the ETF on the exchange. So during the market opening from 9 to 5, when the market is open, investors are able to actually trade in ETFs on the exchange.
So you can buy and sell those ETFs like a unit trust directly on the exchange instead of sending it back to the banks as a unit trust. So it makes it much more convenient, right?
Yeah.
Yeah. So can you just let us know, maybe Mahdzir will explain to us, because you are from Bursa, Malaysia, what kind of ETFs that are available in Bursa, Malaysia?
Okay, there are currently 10 ETFs listed on the exchange, on the Bursa exchange. We have different underlying, I would say. One commodity underlying gold ETF, which is actually managed by Hwang. We also have bond ETF, and we have 8 other ETFs that's actually equity underlying securities. So within these 8 ETFs, we also have different geography, different type of stocks that we have. We have exposure to the Malaysian market. We have exposure to the China market. This one that has exposure to the ASEAN, where it consists of 40 ASEAN stocks in that ETF. We also even have one ETF that actually consists of stocks, Sharia compliant stocks that are traded on the US stock exchange. So in other words, when investors actually want to choose any of these stocks, any of these ETFs, that they have the option to actually have the exposure to the very different diversity of underlying securities or underlying assets of ETFs.
So if I'm buying, let's say, China-based ETF, then I would have an exposure on China stocks, right? So let's say China continues to grow, and then my investment in that ETF portfolio will grow as well.
Sure, exactly. That's what it's all about. That's the unique thing about ETF, because for investors who have exposure to the China market, you don't have to open an account in with the Chinese stockbroker, or even have to make any settlement of choosing the stocks in the China market. But when you actually buy the ETF that's listed on the Bursa exchange, which is the CIMB China 25, we have exposure to the 25 stocks. Right?
So I don't need to select the 25 stocks myself. I leave it to the fund managers, to professionals to do it on behalf of you.
Right. Yeah.
Well, that will be much easier to actually get exposed if I don't know anything at all about the China markets or the ASEAN market.
So yeah, I think that's the other features of the ETF. You have to have an underlying benchmark index that actually track the ETF will actually track. So this, for instance, like you were mentioning about the 25, this is actually a QC index where investors will know that at any point of time when they actually invest in this particular ETF, you have exposure to the 25 stocks, which is transparent. And that's another great feature about the ETF because at all times the investors will know what are the underlying securities that you have in that ETF.
So when they invest in that particular ETF, they actually know what stocks they have exposure to.
I think an easier way to actually describe is on the KLCI ETF. There's one KLCI ETF currently listed, which in other words, investors would when you actually invest in that KLCI ETF, you have exposure to the 30 stocks. So it's not easy, it makes it easier for investors to have immediate exposure rather than you have to buy all the 30 stocks in terms of what kind of size, what kind of volume, and with an ETF, you have a very minimal capital that you require to actually buy the ETF because it trades like a stock. So you can buy as low as 100 units of the ETF, and with that 100 units, you actually indirectly you have exposure immediately to the 30 stocks.
So instead of having that much capital to buy the 25 stocks, I can just buy 1 unit of ETF and have actually exposure on these 25 stocks, right? And I think the price is not very expensive. The price is trading in Bursa Malaysia is probably around 1 ringgit plus.
Right. Yeah. I think most of the ETFs are actually trading at about 1 ringgit.
Yeah. So if I'm going to buy 100 shares, it's going to be only like 100 ringgit to buy an ETF. So we have a very low barrier to enter into this market. Right? Yeah. I guess actually there are not many investors who actually know what ETFs are for. One of the reasons is ETFs are boring. ETF has there's not much liquidity in there, but I'm not sure. Probably later you'll be able to download the slides because we have some figures here that shows the different performances of ETF. For example, the CIMB Asian 40 stocks has a total return of 35% in 5 years. And if we look just at our equity market in 5 years, we are only returning about 8% based on the KLCI. So that shows that there are quite good opportunities investing in overseas markets rather than just investing in the Malaysian market. The China ETF, for example, has a return of 81% in 5 years. That's quite astonishing, isn't it? And what way do you think that the other markets are performing better than the Malaysian equity market?
I think generally, we look at the ASEAN market and China has done very, very well over the past few years. And of course, the other contributing factor to the performance of those two ETFs, I would say, would also be the fact that they are the underlying investors are not ringgit. So we know that in the past 3 years or so, ringgit has weakened a lot. So because of that, this ETF also benefited from currency gains because the underlying investments are actually based in foreign currencies. So because of that, the fact that currency gains coupled with the strong performance of equities in the China and ASEAN market has actually contributed to this strong performance.
So what do you think about other? Because we also have a bond ETF and gold ETF, which is from Hwang. What's the performance so far? How do you think? What's the response so far from investors themselves?
For the gold ETF, when we first look into launching this product, we realized that today there are not many ways investors can actually diversify their investments, especially in gold. And gold is an asset class that everybody understands, and a lot of people like to invest in gold. But usually they will actually go to say places like Hong Kong, Goldman, Hardwood, to actually purchase physical
gold itself.
Yeah. So, but when you purchase physical gold, then you will have the hassle of thinking where should I store my gold, right? And what if there's a theft that breaks into your gold, and they need to buy insurance. So with all this, then we thought that why don't the fund manager will actually safeguard the gold on your behalf, So you just need to trade it via Bursa Malaysia, via in this ETF, to get exposure to gold. And gold is also an asset classes where typically during the bear markets, it will do extremely well. So it's also as a diversification for investors to consider. Of course, performance-wise, we know that the equities market have actually done very well in the past 1 year or so. But performance of gold has been rather flattish. But for us, we take a long-term stance. So we think that over a longer term, there is always a space for you to allocate some of your assets to asset classes such as gold.
Am I right to say that gold prices normally would perform better in a very uncertain market, very unpredictable market? Can I say that?
Yes, it is usually the fact.
Yeah, so it would be good to have actually a gold portfolio or investment as an investment to insure your investment portfolio.
Yes, that's right. In fact, I like to tell investors that when you invest in gold, you should invest it and treat it like as if you're buying a home insurance. So today, when you buy a home insurance, you don't expect a fire to break out in the house, right? But you will pay the premium nevertheless, just so that to mitigate that particular risk, and so that if one day this were to occur, you have some certainty of payment of claims. So it's the same as investing in gold. So today markets may look very well. Some investors may think that if I invest in equities, I will derive a lot more returns from it. But you must also think of it as have some allocation to gold, so that when the markets turn bearish, when the markets go downwards, then that's when your investment into gold will actually benefit. So it's more of a insuring yourself and preparing yourself for that day to come. Of course, we all don't hope that that day will come, but eventually we know the market goes in cycles. So it's a preparation for that.
So that could help you in the portfolio, right?
Correct.
Now, before we go further, we're going to have our next poll. Hearing that in investing, you can either do it yourself or you get the fund managers to do it for you. So, if you are ready to invest in the stock market, would you prefer to invest in the stocks yourself, or would you prefer to get a fund manager to manage your investments? Let's take the next poll. Thank you so much for answering. Now, let's take a look at the results of the first poll. What is the result of the second? Okay, maybe we'll take a look at this poll first, right? Well, there's actually 92% of the audience would prefer to invest stocks themselves rather than getting a fund manager to invest for them. And I guess one of the reasons why they prefer to invest themselves is because of the fees. The barriers to entry is quite high. If I were to buy a unit trust, for example, I'll probably get a sales fee for maybe 5%, and then you get a 2% or 1.5% annual fee. So the first year I'll probably not be able to make returns, right? But what about ETFs? Since that it's an easier barrier to entry, we don't need to go through the sales fee that we pay for the sales force. Do you think you can get better returns with trading the ETFs or investing in ETFs rather than the unit trust?
Well, I think this is where you can see the differentiation between the ETF and the unit trust because of the cost of investment. ETF actually provide you a low cost where you don't have to save the funding charges. To say whether the ETF actually give a better return than the unit trust is very subjective, I would say. Because when you buy the ETF, the way I say it is that you buy ETF, you buy the index, you buy the market. You buy the unit trust, you buy the skill of the fund manager to actually manage your fund. So it depends on how skillful your fund manager actually is. So to me, I think it can complement each other because there are times that the fund managers are able to actually beat the market, but there are times that they actually underperform the market. because I mean typically you can see that the performance may vary over a different period of time. But what's more important is because of the cost of investing in the unit trust, sometimes the performance can actually be much lower than what the ETF actually delivers. Again, like I said, that because the ETF, you don't have a front load charge, so it's as good as your cost will be the brokerage fee that you actually pay. And as you can tell, that now the brokerage rate is actually very, very low. Even on an online trading, for instance, you can get as low as 0.1%. ETF trading has actually get exemption for stamp duty waiver by the government actually starting from this year. So you know that the cost is very low, and then you know that the return can actually be quite significant. What I can say is that, going back to the question whether the ETF actually can perform better, then I think there have been studies actually being made over a longer period. Typically, your ETF can actually get outperforming the active funds, probably 70% or 75% of the unit trust that available after you take into account the cost of the cost.
Yes. Yeah, I guess the cost is one of the things that why investors want to win themselves, right? But of course, if the fund is performing well, I would not mind paying the fee as long as
sure.
I get the
I mean, they are good, strong performance unit trust. But I guess at the end of the day, investors will have to do their homework to actually check on how the funds actually perform. I think there are quite a number of source of information that is available, because you have, like, for instance, the Lipo table, for instance, where you can get the ranking of all the unit trusts available in the market. And in fact, you could actually see on the Lipo table, they actually have unit trusts, or rather the ETF actually being categorized within the unit trust. And you can actually see from that table, I think on average, the ETF would be somewhere in the top quartile, or maybe on the 25% rank of the list, which means that there are opportunity for investors to actually get a good effective return on the ETFs.
Right. I guess we have to take a long-term view instead of a short-term view for ETFs and even unit trusts, right? We should not use it as a trading instrument. Would you agree?
Yeah, certainly. I think this is where sometimes people tend to get a bit mystified on the fact that because the ETF actually trade on the exchange, the perception, the expectation is that the ETF actually is supposed to actually trade like a stock, right? But because the nature or the feature of the ETF is actually like the unit trust, so it's more of a medium to long term. So it's not like, I mean, if you buy a unit trust, you don't expect to actually do it on the screen 9 to 5 to see how the movement of the ETF, because you don't get that kind of movement for an ETF. But it's just like a unit trust.
But I guess you don't have that volatility. It's also quite safe for investors, and because investors in the long term will not want to have a lot of volatility in their prices as well.
I guess which means that if an investor is of a lower risk appetite, then ETFs make a more suitable ETFs is a suitable investment for them rather than buying into individual stocks, because some stocks do go up and down, and it's very volatile within say weeks. But unit trusts and ETFs are generally more stable in nature, given the diversified portfolio. So that hence, if you're an investor who doesn't want to do a lot of homework to find out what stocks to buy, and doesn't really have the time to even monitor your portfolio on a frequent basis, then I think ETF would be very suitable for that.
So would I say that ETF would be a very good stepping stone for investors who have not invested before, and get into ETFs first before buying the individual stocks themselves?
Yeah, I think so.
Yeah. I think that brings up the point earlier where you say that there's some of the factors that why investors do not invest actively in the market, but they don't have time, they don't have the ability to actually do their own research. I think ETF is definitely one of the suitable product for the investors. Then, because you know that the potential for you to actually generate the kind of returns in the market through the ETF. So you can be, at least you know that you can actually use that as a form of savings. And sometimes if you look at a much longer perspective, it can be like a retirement fund for investors, depending on the underlying securities. I think brings up again the issue about what are the underlying stocks or securities. Like if you invest in a bond ETF, for instance, you know that you can actually get bond kind of return over the longer period, right? Obviously, when you talk about equities, they will be very, I think, we have a table that later on hopefully you can actually have a look at it where, for instance, like the China ETF can give you, spectacular returns, but at the same time it can give you like 30% now retracement for a certain period. So it depends on your risk appetite as well.
So that comes to our next session later on, and how do you actually find an ETF that is suitable for different type of investors. Now, in fact, you can start asking the questions right now. We will compile the questions and we will bring up the questions in the last half an hour of this webinar. We will only answer the questions in the last half an hour after we finish the webinar, the presentation today. So can we take a look at the first poll results that we have looked at earlier? We want to see whether most investors are investing in the stock market, whether they put their money in unit trusts, bonds, and so on. Here are the results. So we have quite a mixture here. Most of the investors prefer unit trust and stock market because unit trust is basically quite, indirectly is also the stock market, right? So we have properties which 30%, bonds, I think the smallest one. There are also investors who are trading in currencies. But I guess with ETF, you can actually have a mixture of all of these, isn't it, into a portfolio. Of course, we have not even mentioned about REITs yet, which is probably going to be on the next webinar. So that's another topic altogether. So yeah, I think there are still quite a lot of interest in the stock market, but I think what we have gone through earlier was the three problems that investors face in our previous workshop. Number one, they do not have enough skills, they do not have enough capital to invest and build a portfolio, a good portfolio, and they don't have the skill set, right? And I think like Mahdzir just mentioned that buying this unit trust would probably solve these three problems that we have just mentioned earlier. Right, so now we're going to go to the next part of this workshop, and this on the performance of ETF. We already talked about performance. After the workshop, you are able to download the slides, and that the slide will basically show you the performances of each of the ETF, as Mahdzir just mentioned, and you can see for yourself. And if you want more detail, you can always go to Bursa Malaysia website or Bursa Marketplace, or you can even go and look at the Lipper ratings, like what Mahdzir mentioned. You can find out the performance of this index yourself. So now we're going to take a look at now the selection of ETFs. As if I'm a beginner, if I'm just starting to invest, what do you think? What ETF do you think I should be looking for? I'm a new one who have not invested before.
Well, if you want to actually have exposure to the Malaysian stock market, because that's probably the most you're familiar with. You
to have a feel of the Malaysian market.
You can have a feel of the Malaysian market. I mean, you probably read in the newspaper, every other day, analysts talk about the potential of the market, the KLCI, the level that they actually reach. Then obviously you can buy the KLCI ETF. So it's easier for you to understand because the KLCI, if it's actually up by 10%, then potentially your ETF will actually give you the same kind of return. But it's benchmarked against the index, right? So I suppose, again, like I say, if it's just a beginner and then you just want to have understanding about how the equity market's performance, then the KLCI ETF would be probably the appropriate one. But nonetheless, you can also, again, like I said, I think it depends on your risk profile. Maybe you want to have exposure into the gold ETF, for instance, where you want to actually hedge your. I think gold is a good product to hedge your inflation over the longer term. Then you can actually go for investment into the gold ETF, or even the bond ETF, where it can actually provide you the kind of retirement kind of investing for investors.
Yeah, and I guess that's the beauty about ETF, isn't it? Because, for example, if I have only 1,000 ringgit, I can actually have exposure to many ETFs because the prices is about probably 1 ringgit plus.
Yeah.
So I can probably have like 5 or 6 ETFs in with 1,000 ringgit, including gold, for example.
That would already give you, easily maybe 100 over to 200 stocks that you actually have exposure to with just 1,000 ringgit.
In fact, you can do your asset allocation using the ETF. You can have the gold ETF, and then you can have the equity ETF, and within the equity ETF, you can have the high, the high volatility like the China ETF, the more stable market. Obviously, Malaysia will be more stable, and then you have the dividend yield ETF, which can actually give you a dividend kind of income regularly over a period of time. So, while it depends again how savvy you are being an investor, you can actually use that. But it gives you the flexibility for your investment asset allocation using the ETF.
So I guess he has to boil down to the risk appetite for the investors themselves, right? Then you allocate your assets. For example, if I'm a person who likes to take more risk, then I'm probably going to get a more volatile or more risky, which of course high risk also has high returns.
Sure.
I will have that more into my portfolio rather than bonds or gold. But if I'm a more risk averse kind of investor, I'll probably want to have more investment in gold. Maybe not, you still get the returns, dividends, maybe on bonds. The Malaysian equity market, but less the more volatile ones. Am I right to say that? But the selection of ETFs themselves, as an investor, what do I need to look for when I look at an ETF? What information which is vital for me before I make an investment decision?
I think before investors decide to invest into an ETF, most importantly, you need to first understand what the ETF invests in. Essentially, it means what underlying index is the ETF tracking, because ETF is about tracking an index. So that research has to be done. So although we say that investing into ETF is easy, not as complicated as picking individual stocks, but there is still some homework that needs to be done. So which means that the investor needs to first find out, say for example, if you believe that, or if you read that the equities market in Malaysia will do well, then you can then look for an ETF that tracks the Affin index, for instance. So, so that is very important. So you need to understand the index, which I believe today, whether you log into the fund's website or even refer to the prospectus of the fund, you will be able to find such information to know what exactly this index is tracking and the objective of the index. So that's very key to making that decision. Secondly, if the fund has already got a longer term track record, I would say that you will then have to drill in a little further to check if the performance of the ETF is actually in line with the index or the benchmark. So this is important because if you want to invest into an ETF, you need to make sure that the fund manager is actually tracking the index efficiently. If it's not efficient, then you're risking your money. It's not really a passive fund. So these are the two key important factors I believe that investors need to consider. And of course, last but not least, it's always about the risk of the fund. So today, I believe many investors, shy away from reading prospectus, because prospectus is a very boring document that is available out there. But it's also key to help investors make that decision. So hence, if investors have the time, do go through the prospectus so that you actually understand better the product features as well as the risk that is involved when you invest into the fund.
Mahdzir, you want to add some more?
Yeah, I think I just concur what Etf Choo was saying. I think investors just need to do a bit more research in terms of getting. But what I would like to add is also that I think the information now, the advent of technology is very much convenient for everyone to actually look for it. I think for the ETF, one of the requirements under the guideline is also that all the ETF must have their own website so that investors will have access to the information. We also have some of this information on Bursa Marketplace. This is actually our flagship website for investors, where people can actually access easily to find out information about not only about ETF but also stocks. We are currently taking the initiative to have an Etf Research Webpage, where investors, there will be research report generated by the research companies probably on a quarterly basis, just to actually share with the investors what the ETF is all about and how the performance has been. This is more for information sharing. So I think we try to make it more accessible for investors to know what the ETF that is available on the exchange. And as I said earlier, that all ETFs actually perform differently. So it's just a matter of how investors look at which ETF that they are interested in. And I think more importantly, it's all about timing here actually. Right? Not all ETFs actually perform good all the time. And for investors, you must know when actually they have to the time to actually come in and actually reap the benefit of it. I mean, for instance, like the gold, I know that gold has not been performing, it's been flat for the last 3 months. Yeah, for the last few years actually. But I think there will come a time because you know, as you know, that the investment will have their own cycle. China will have their own uptrend, same like the KLCI, for instance. I think this last year and this year has been pretty good, but if you look back the last 3 years prior to that, actually market has been flat. So it's all about timing actually, and when investors actually do their own research and see that, okay, look, I'm more comfortable in the Malaysian market, then you can actually go with the KLCI ETF. If I'm more comfortable like the ASEAN, there is an ASEAN ETF, for instance, you have exposure to the five countries, then you know you can actually make benefit should the ASEAN market actually goes up.
Right. Yeah. Right. So yeah, Mahdzir mentioned about timing, which is quite interesting because in our next webinar, we're going to have an expert in timing actually that looks at the market performances, not only just locally but also internationally. So please do attend our next webinar, and you can we will email to you those details because you have already registered. You should get the details on your email. And that comes to my next question, Mahdzir and Lee Choo. Do you think would be the best strategy to invest in ETFs? Should I, like what Mahdzir says, wait for the right timing, or should I have a more, investment plan or strategy where I could invest every month, or once a year? Or, you have the dollar cost averaging. Would that work? So, what do you think would be the best strategy for ETFs?
It's good that you mentioned the dollar cost averaging thing, because I think that fits perfectly for the ETF.
That will solve the timing problem, doesn't it?
Well, not to say you solve the problem. I mean, nobody knows where that particular market hits the bottom, however not. But the fact of the matter that typically your dollar cost averaging when the market the price comes off, and if you believe the story, you can actually add on your investment into it. And given the fact that ETF is a low cost product, so you know that you're not end up having to pay more in terms of your entry cost to the investment. So I don't think we can actually give you a perfect solution to actually how you actually do the strategy, but that's where the ETF actually bring you the features about low cost investing, where investors can actually do their own strategy depending on how the market timing, depending on how the cycle of the underlying asset that you actually have in your ETF. So dollar cost averaging is definitely something that is very appropriate strategy when you actually invest in ETF. And again, at the end, I guess it's more about how your understanding about the investment of that particular ETF.
I think to me, how you should strategize would be, first you need to understand why you're investing, right? What's your objective of investing? So, say if you are investing for the long term, let's say you are building up your retirement fund, for instance, then definitely I think adopting the dollar cost averaging method would be best. Like Mahdzir said, nobody can time the market. Even the fund managers can get it wrong, despite them looking at and monitoring the market on a daily basis. So what we would suggest is that if you set aside a small amount of money every month, you just buy the particular ETF that you like. And how we would suggest is that you should build a diversified portfolio. So at the end of the day, if you are say for a longer term, maybe we would suggest a balanced portfolio, say 50% in bonds, 50% in equities. If you're more aggressive, you can go 70% equities, 30% in bonds. So the key is still diversification, because things like bonds and gold will be slightly more stable as compared to equities. So the key is that when you invest into ETF, it's not about getting in and out. It's not about trading. So it's about just investing, leaving it there, make it compound, make the returns compound over time, and you will reap the benefits at the end of the day. So think about it this way: if you invest or build your own portfolio of stocks, you will have to monitor it on a regular basis, and you will have to refresh your portfolio, right? But if you invest into an ETF, because it tracks a particular index, the index itself actually rebalances itself on a semi-annual or annual basis. So which means without you incurring any transaction costs at your end by going in and out, the ETFs itself is already rebalancing itself. So it's already, doing the work for you. So I think, that makes it a suitable long-term investment. So there's no perfect way as to how you can strategize. It's really depending on, what is your risk appetite, what is the investment horizon that you're looking at, whether it's long-term, short-term, and then from there, you decide where you want to allocate your money.
I think that's one of the beauty in ETF as well, right? Because it's traded on the exchange, it's mobile, it's liquid, you can easily dispose them. Instead of me, for example, buying a property and then buying physical gold and buying stocks, and imagine if I want to rebalance the portfolio again, I have to sell gold, and it takes much more hassle. If you're trading ETFs, I can just sell it like any stocks in the exchange. I think that's one of the benefits of investing in ETFs as well. We'll come to the next poll. This is an interesting poll because we want to find out whether you guys have invested in ETFs before. So the next question on the next poll will be, have you invested in ETF? Is this a yes or no answer? In the meantime, you can keep asking those questions because we are still compiling the questions and we will answer them just in a short while because we are about to end the webinar. All right, can we look at the results immediately? Well, we have almost 90% have not invested, so hopefully after today's presentation, you will change the view and you will start to invest in ETFs. But yeah, I mean, what do you think? Because you have been issuing ETFs and as a regulator yourself, what do you think that many people are not investing in ETF?
It still talks about the investor education. I think the awareness is still very low. I think in Malaysia, maybe for some, liquidity would be one of the other issues that they will actually look at before they want to come in, and when they see that there's no liquidity, then they may not be interested.
Right.
ETF is actually quite a household name outside Malaysia. I think to a certain extent, when you are in the investment circle nowadays, you can't avoid the fact that you will read about ETF in one way or another. But I think in Malaysia, because the awareness is still not there, maybe the understanding hasn't reached to the level that we want them to be. And this is where Bursa actually takes a very much more active role. I think we do actually conduct a lot of promotional activities in terms of investor education. I think some of the training workshops that we actually have, we collaborate with the brokers, for instance, brings on the topic of ETF for investors to actually invest in. One thing that we can notice is actually the take up or the investment has actually, we have seen increased trading liquidity for the last, in fact, for the last 4 months actually. Ever since the stamp duty waiver actually kicks in at the start of the year. So that's a good positive sign, even though the volume is actually not as big as what we expect, what we are actually expecting. But it's a good development that's taking place. What we also want to see is actually having a more depth of ETF listed on the exchange. Then it gives more flexibility for investors to actually have, the various options for them to actually do their own investment and depending again on the appetite that they have. So that probably I would say the contribution that contribute to the low trading liquidity or participation by investors at this point of time. But we're pretty positive. I think for Bursa, for the exchange, what we are doing as mentioned earlier, that we want to see more ETFs actually be traded. There will be probably more new ETFs that will come on board that give you a bit more different flavor. I think the expectation of investors who want more volatility kind of ETF. I think typically investors are more excited about all this volatile stuff. For instance, there might be something of this kind coming on board. And maybe we're going to see more of foreign currency, foreign exposure ETF that actually be more interesting for investors to come on board.
Right. What about Lee Choo? What do you think?
I think at the end of the day, most of us like to be fed with information. nobody wants to do the homework, right? So you buy unit trust because your agents will advise you and tell you what you should be investing in. If you buy stocks, you may also, follow stock tips or rely on some of the information that you get, say, research report. But because today information on ETF is still, I would say, rather scattered. So say when Bursa Marketplace actually performs the research report, then that will be a good avenue for investors to find information about ETF. So I think that awareness, like what Mahdzir has brought up, is very true. That today many of us still is unaware that there are actually ETFs, and a lot of people don't understand what ETFs are, although they can actually be quite simple to understand. So I think the real barrier is that nobody is really telling them go and buy ETF, unlike unit trust or stocks.
I think the key point here, Benny, is that if they have investment in unit trust, there's no reason why they cannot invest in ETF.
Yeah. I think unit trust is a very big industry, isn't it? I mean, probably billions are invested in unit trust. Yeah, I guess like what Mahdzir just mentioned, I think the awareness is one of them, and the other one is actually the availability of information today. And I'm glad that Bursa Malaysia is taking initiative to do the research on ETF. But when do you think this will go on Bursa Marketplace? Is it still on the stage? Do we have the research?
It should be coming up pretty soon, actually. I think there are a few reports are coming on board. This is a new scheme that actually we launched. So then investors will have more access to information, and it will be good to see that there will be more companies or more response by the investors to actually look into ETF as part of their investment option.
Right, so I guess it's a good time to actually register yourself in Bursa Marketplace so that you get information on what the initiatives that Bursa Malaysia is taking, especially on the ETF side. Because I think in the US, ETF is huge, right? You even have fund managers who are investing into ETFs into their portfolio. So you hope to see that will happen in Malaysia one day. Yeah. And like Mahdzir said, we are gaining traction, and hopefully with all the information and awareness that's going to be created and the research that's going to be spearheaded by Bursa Malaysia, we will see an increase in the ETF awareness.
If you look at, I mean, if you want to see how the ETF actually perform, look at the input table. I mean, that the numbers won't lie, and then you can see for yourself how it actually perform
against the unit trust.
And how much the entry cost actually makes a difference to your return at the end of the day.
Right. Yeah, we will send you the slides because we also have the figures here we have prepared, but unfortunately the slides were unable to be displayed on the screen, but you should be able to download the slides later. We have not ended the webinar right now. We will come up with the 3 key takeaways that you need to have. But right now, we're going to open to question and answers from the audience. So we have a few questions here that have already taken from the audience. There are questions that has already been answered, and those questions that have already been answered, we are not going to put it up here. Now, one question here asks, maybe both of you can answer, or one of you can answer, is that how is the price of ETF being determined?
The ETF has actually been, the NAV of the fund is actually being calculated on a daily basis and be displayed. So the price is actually will have to be more or less the same as the NAV of the fund. Right? So just go a bit more technical on this. I think we do have the market maker where they actually put their bid and offer prices based on the NAV of the day.
Right.
So that's where you can see that the prices actually between. At the end of the day, the trading, it very much depends on the demand and supply of the investors, right? So the prices actually will be based on the NAV that is being disclosed on a daily basis. In fact, some of the ETF actually will have an intraday NAV that will be displayed on the exchange actually.
So the NAV is basically based on the performance of that fund, right?
Yes, it tells the net asset value of the fund at all times. Actually. So at the end of the day, just like unit trust actually, you have your NAV calculation, then they display the price, right? So in this case, it's the same thing. Because the ETF will actually be calculated just like unit trust, and then the following day when actually being quoted in the market, there will be a bid and offer prices which actually been put by the market makers or even by investors at large. Yeah.
So they are actually market makers who put their bid and offers and
yes, right. Yeah.
And this comes to the next question actually, because when we look at the ETF, for example, we see very, very low volume on the buying and selling side. So investors here is afraid of buying ETFs because, you know, if I have that kind of money, what will happen if I keep on buying ETFs when the price go up and so on and so forth, because the liquidity doesn't seem to be there.
I think liquidity should not be a concern for ETF because many investors out there, especially stock investors, they are well trained to actually look at the trading volume as an indicator of liquidity. But it doesn't hold true for ETFs because ETFs issuers like ourselves, for instance, we have to appoint market makers to actually provide the liquidity. So which means that if we look at the bid and offer, you know, at any point in time, there would be some bid and offer volume that is put up on the board. So these are all done by the market makers who are actually behind the scene where nobody can see them, right? So if there is no participation or transaction being executed, then of course the trading volume will be, you know, low or even zero, right? But that does not mean that nobody is buying or selling because the market makers has actually a commitment or is obligated to actually continuously offer to buy and sell the ETF units. So it should be, you know, something that the investor shouldn't be concerned about. In fact, if you want to drill in a little deeper, you should be looking at the bid and offer volume that's being quoted, rather than, you know, focusing on the transacted volume.
So I guess if I don't have a picture, I would thought that, you know, the liquidity is based on the transacted volume where you actually have market makers are waiting to buy and sell over there. The bid and offer prices. Yeah, so I think that will solve that liquidity. So you do not have a problem if, let's say, about 1 million ringgit to buy an ETF, that should not really move the prices, isn't it? Do you think it would?
It may, but very quickly the market makers will come back in to bring it back to the fair value of the fund, which is closer to the NAV. Yeah, so it wouldn't move too far away from.
Most likely, you will not be that far away from the NAV.
Yeah, because of course, if the price went way above the NAV, or a lot of these fund managers or the market makers want to sell because the price is already quite high.
Yes, right? That's right.
Because I think another feature that we never really mentioned here, which is a bit more technical, at the same time, you have the creation redemption kind of mechanism for investors to actually invest in ETF. But this is where the market makers play that role more actively, where you can actually create the units for a certain size, a minimum size, for instance, like some of the ETF actually with the 400,000, you don't have to actually trade through the exchange. You can actually create the units through the market makers, actually, for instance. So again, like I said, that if you want to do a 1 million, potentially you can actually buy it from the market, or you can actually do it through the creation process.
All right.
So that's where the efficiency of the ETF actually brings you the benefit for the investors, because you're not going to be that far off from the underlying NAV of the ETF.
Right. All right. The next question will be, what do you think will be the biggest risk investing in ETFs?
I guess it depends on which ETF you're talking about, right? So, which is why I said it's important that you read the prospectus to find out what are the risks involved. So typically, for instance, if you invest into a Malaysian equity ETF, for example, then the risk that you are taking would be definitely the performance of the underlying stocks. So it's definitely market risk. So if markets were to go down, then clearly your ETF pricing will go down as well. And if you invest into, say, the China ETF, for instance, you need to understand what are the investments that you are making, which is in China. So you will take a risk of the China equities, and at the same time, don't forget about currency, because you are trading it or buying and investing it in ringgit, but the underlying investments is actually denominated in foreign currency. So you have the additional currency risk that you need to take. So different ETFs would typically give you different risks.
But I guess it's the risk is still lower than buying individual stocks themselves.
Yes.
Sure.
Because we are looking at a portfolio, right, rather than just looking at one or two stocks. Yeah. So again, I think the risk depends on what instruments you are trading, what ETFs you are trading as well. Right. Now, the next question will be, well, the next question is actually quite obvious. Right? They are asking here whether do you need to buy the ETF through stockbrokers? yeah, ETFs, you definitely have to go to the stockbrokers. It's just like buying a stock, right? Investing. Now, what's the difference between ETFs and REITs and real estate investment trusts?
REITs is actually more on the property. It's actually a property trust. It's something like the ETF in the sense that it actually is a basket of a portfolio of property that actually built as a trust and actually listed on the exchange. Yeah. But the difference is actually the REITs. Well, it's again, I say it's a basket of the portfolio of properties, and they actually get managed by a professional property management company, and all the income that the REITs actually receive from the rental of the properties will actually be distributed to the investors, to the unit holders of the REITs. Yeah.
So the focus is actually on properties and real estate, right?
Correct. Yeah.
Now, the next question would be: does ETFs provide dividends?
They do, but it depends on which ETF. Not all actually give dividends.
Not all.
Yeah.
So like I said, they have to look at the prospectus again. They have to dig in a bit more research and see.
Yeah. For instance, like gold, it doesn't give you any dividend because gold doesn't produce anything.
Right. But do most of the ETFs provide dividends? For example, if I'm investing in, let's say, the ASEAN 40 stocks.
Yes. Most of it actually, because if you have equity underlying in the ETF, because that portfolio will actually receive dividend regularly from all the stocks that you have in your portfolio. So this dividend actually will be distributed to the unit holders. So for the equity ETF, it's quite easy for you to actually distribute because you have a source of income from there. But I mean, for the case like the gold ETF, you don't really get the return. So investors just depend on how the gold prices actually move.
Right. Yeah, the next question is a bit interesting because when we buy a unit trust, for example, there is a cost in maintaining the unit trust. There is a management fee that they have been charged every month. But what about ETF? Do they have the same structure that the unit trusts have as well to maintain it?
Yeah, it does. So all ETFs also comes with management fee, but the management fee that we charge for ETFs are generally lower. So take for instance, an equity unit trust fund typically charges somewhere between 1.5 to 1.8% per annum for management fee. But for ETFs, generally it's below 1%. Some, can be as low as 0.4, 0.5%.
So currently in Bursa Malaysia, what ETFs that we can invest in to have exposure in foreign countries, and which foreign countries are we talking about?
Okay, we have one on China ETF, one ASEAN ETF. We have one US dollar ETF, which is actually exposure to the US market. So these are Sharia ETFs.
Sharia, yes.
Yeah.
Agribusiness.
The agribusiness. There's one Asia Pacific agribusiness, and also one ASEAN ETF, dividend yield ETF. So there's 5 different ETFs that actually have exposure to the foreign market.
Right. Now, the next question here is, do you advocate dollar cost averaging, which I think we have already answered earlier.
Yeah.
Wow, this is interesting. What's the right entry price for ETF? You can go to timing again, right?
I wish we had the crystal ball to say that actually.
I left my crystal ball at home. I think it's timing an ETF is not easy. Unlike stocks, some people like to use technical charts, for instance, to decide when to enter and exit. But because ETFs are a basket of stocks, so you can't use technical indicators, for instance, to enter. So I guess it's again back to your longer term view. So if it's for short term trading purposes, then timing becomes very important, right? But if it's for a longer term investments, buy and hold, then I don't think timing really matters that much. But dollar cost averaging is definitely one method that you can overcome the timing issue.
I think just to give a simple illustration, it's like if you buy the ETF, the KLCI ETF, for instance, right? And if you, I mean, we read reports now. Okay, KLCI expect the fair value 1,950 points, and I mean, if it so happen that the market is actually trading about 1,700, then the difference, that's where the expectation of the return that you might get.
Right.
Where you might get if the KLCI actually reach that level that you think that you can reach actually. So that's where if you have the opportunity when the market comes up and you feel that you still believe that the KLCI upside potential is the fair value is what that you've been reading, for instance, the research report, whatever it is, then it depends on where the timing that you actually come in. So there's no perfect timing that you can actually say, but it depends on how you read the market. As you know, the market will actually go in cycle, and if at any point of time, if the market actually goes down lower, that's where the dollar cost averaging actually become handy. Then you know that when the market actually picked up, you can actually get the benefit of that.
Right.
Yeah.
Right. So, like I said, if you want to know about market timing, please do attend our next webinar. Once again, brought to you by Bursa Malaysia. Now, this will be an interesting question because we talk about gold, right? Because the banks allows you to actually have your investment or savings in gold. Would it be better to put that kind of paper gold savings in the banks or ETFs, and what's the difference?
I think I get that question a lot because that's also one of the alternative investment for gold, right? But what we offer is that number one, ease of transaction. Because at the end of the day, most of the gold accounts, you still need to physically walk into a bank to perform the transaction. I think some banks probably do offer the online option. Then the second point is that we also have to look at the spread of the prices. So between the bid and ask spread, what is the bid and ask price? What is the spread that you get?
And the spread from the banks can be quite
yes,
wide, isn't it?
correct.
Sometimes.
So for the banks, I think typically there are some ranging as low as somewhere between 2 to 4%. That's on the lower end. And on the higher end, it can go up even to sometimes 10%. So it depends on which bank you bank with. The spread is different. But for the ETFs, because it's traded on the exchange, there are certain rules that we need to comply with, and the market makers are also there to ensure that the spread that we quote is very tight. So that investors can. It's easier for them to get in and out. Otherwise, you need to, if the spread is say 8%, you will need to wait for gold price to move up by 8% before you break even and start making returns. But if the spread is low, like somewhere between 0.5 to 1%, then it makes it easier for you to invest. And of course, the other thing is that investing into the deposits account in banks mostly are paper gold and it's not physically banked. So if you want, the assurance that there is gold in, physical gold in place, then investing into the ETF could be a better option. Plus, for the gold ETF, you can actually walk out with physical gold. It allows for physical gold redemption. But of course, you need to accumulate a huge amount of units before you're allowed to redeem the physical gold.
Right.
Yep.
Right. Okay, so that answers the question. Now, this is another interesting question. EPF, the Employees Provident Fund, allows investors to withdraw and invest in unit trust. Can they do this on ETFs as well?
They can actually. Currently,
yeah.
They go through an approved asset manager.
Yeah. So far, I only know of one. Only one broker that can do it, which is Philip. Yeah, Philip Capital.
Yeah.
So they allow investors to withdraw and.
Okay, what they can do actually withdraw
stocks,
and actually buy.
Yeah, and buy. I think they can buy stocks and ETFs.
Yes.
Right.
But we are actually trying to make arrangements currently to. I think we have already made a proposal to ETF also to allow the contributor to actually have a direct investing into ETF, because of the fact that it's a low-cost product, and you know, it's just like they buy unit trust, for example. So this is something that is hopefully you know, in the pipeline. I think that we have actually made our case to EPM, and then they are actually looking into it.
Oh, that's wonderful. That'd be wonderful, isn't it? If they are able to adopt this.
Because it is another way of to actually give investors as a form of retirement as well, where they can actually get exposure at a low risk because of the diversification of the ETF.
Right. Yeah, I think we only have one or two more questions left. The next question would be, which is the best performing ETF listed on Bursa Malaysia? And I think, like Mahdzir just mentioned, you can look at the Lipper ranking and see for yourself which are the best performing ones, or is there any way?
Yeah, again, like I said, I mean, unfortunately, we couldn't actually flash the table that we have. I think on the 1 year basis, you have 11% for the ASEAN ETF and also the Malaysian underlying ETF, which actually the top performing for the 1 year.
Yes.
If you look on the 5 year basis, you have the China ETF. I think
it was 81%. I saw there.
Something like that. Yeah.
So if you annualize it, it's probably about 15%.
Exactly. Yeah. So it depends on different. And again, like I said, that you know, different ETF perform differently because it has a different underlying of the assets under the ETF. So we can't really say that what's the best. So I mean, we can say the best for 1 year would be the ASEAN and the Malaysia, and the 5 year is actually China.
Right.
So you never. Well, those are all historical.
Yeah.
You never know. 5 years, I mean, 2 years down the road, gold ETF can be the best ETF anyway. So the gold price actually shoot up. So it depends again on how you view what kind of asset actually have the potential to go higher.
Yes. Oh, but I guess because Malaysia is one of the lagger in the performance of the global markets, and I think once now that we already have our election, that uncertainty has already been removed. So moving forward, do you think that the Malaysian market will start to follow back the rest of the performances of the market? Because we look at the Dow Jones Industrial Average, for example, or even the European markets, they have gone up about 31% in the past 5 years, but Malaysian market has only gone up 9%. So do you think there's still a lot of growth for the Malaysian equities market? This is just your opinion, don't worry, it's not
I should disclaim myself for being a Bursa actually, but I think relatively speaking, I think we're quite positive on the equity market. I think going back to your statement about the post-election, there's one uncertainty out of the way, and obviously, I think generally we have the feel-good factor in the market. Whatever that we've been hearing in the market about the policy issues and uncertainties that actually takes place that give comfort to investors. A good reflection of that is actually how the market performed when it was re-quoted. I know that it's a bit too early to actually say anything because it's just the second day after the re-quotation, but the fact of the matter that the market's still able to actually hold it well. There's a certain vote of confidence by the investors' fraternity on our market. I believe in terms of the valuation of the market, it's pretty fair, and given the fact that if this feel-good factor and the market sentiment remains to be positive, backed by the earnings, which I think that the investors, our research houses, are expecting EPS growth of the market in the region of 8 to 10%. The market certainly has some upside potential to it.
Right. Yeah, I guess the market shows itself in the past 2 days because we were actually expecting the market to perform worse than what it's currently performing. But yeah, I think it's holding quite well right now. Right? Okay, this comes to I think we only have 5 minutes left, so we're going to take our last poll. I think we already finished our questions, but before you go, we're going to give you 3 takeaways. But before that, we're going to take a poll from you guys. And the next question basically be, after hearing all these, we only have about 90%, or 10% who are investing in ETFs. Would you change your opinion after this? Would you be investing in ETFs? Okay, now let's take a look at the results.
Oh, wow.
Okay, the numbers has improved a little bit. We have we have able to convince 5% of the audience.
Again, we did some justice to looking here, right? Yeah. So okay.
Yeah. So wonderful. So a lot of people are now. Yeah. I think it's about awareness and the availability of information, right? And I think when we have the information, we will probably really want to consider ETF, into our investment portfolio. Right. Yeah. So the key points, the 3 key points that we must know in investing in ETF is the first thing after the discussion that we have made that ETFs has always been considered as a long-term investment alternative instead of a trading investment instrument. Because if you get the kind of dividends that we just mentioned, and in the long-term growth, we have also seen the performances of the different ETFs. We have seen the performance actually has been even overperforming the KLCI in most of the ETFs that we looked at. So if you compound investments, definitely you will have much more bigger returns. So it has to be a long-term investment alternative. Now the second one is ease of investing. That will solve the 3 problems that we faced earlier, which is not enough capital, not enough skill, not enough time, right? Because with ETF, that gives you an access with very minimal capital. As low as 100 or 200 ringgit, you can already start getting an ETF, and that will give you an exposure of a basket of stocks, right? And the cost is minimal as compared to unit price because you can actually buy and sell them through the exchange. And like Lee Choo has just mentioned, the price or the NAV or the bid and ask has always been set by market makers to make it very competitive, and the spread will be quite low, right? The last part will be these ETFs to give you diversification, right? So instead of just looking at the Malaysian market, if you have been investing, for example, the China ETF that Mahdzir just mentioned, in 5 years, there's an 81% return, which is, it's very, very, very good, right? So with even with 1,000 ringgit, you can have a few ETFs that gives you an exposure of even gold or bonds or even stock market in the local market and even the foreign market. So these are the 3 things that you must know. And if you can, you will have the video after this. If you can share this video to your friends so that they too will know about ETFs, right? So this comes to an end to our webinar today. Thank you very much, indeed, Mahdzir Othman,
Pleasure.
Chong Lee Choo, for joining us, and definitely we are able to learn quite a few things today. And I think most importantly, we are able to convince, right, from those who have not invested in ETFs now wanting to invest in ETFs as well.
Just make sure that they do the actual trading now that they are willing to actually invest in ETFs. So we look forward to seeing more activities, more participation by investors.
Right. So is there any last advice that you want to give to the audience before we end this webinar?
No, I think it's just investing in ETF is actually one of the main improvement that we see in the global market. I think as an exchange, we would like to see the Malaysian investors to actually start to look into ETF as one of their investment instrument. There are many ETFs available. I think information are also available for investors to know about investing in ETF. And also do attend some of our educational or marketing promotional activities where we do have actually a segment on the ETF for investors to know more about it. And we look forward to see more high participation by investors on the ETFs available now on the exchange.
And the information that you mentioned is all available on Bursa Marketplace, right? You can actually get those workshops that's going to be conducted and so on.
Yes.
Yeah. So please do register at Bursa Marketplace. What about you, Lee Choo? Any last advice to the audience?
For me, I think just one advice: don't chase after returns. The best performing ETF or stocks may not end up as the best performing ETF or stocks in the next year. So the key is to adopt a diversified approach when you build your investments portfolio. That's important.
Well, that comes to an end to the webinar. Thank you very much once again, and thank you very much to you guys for joining us in our webinar, and have a good evening.